How much of a mortgage will you qualify for based on the income you make? That's what we'll be discussing in this video. I've picked out 3 different household salary points that will be covered today: $100,000, $150,000, and $200,000. This is one of the main questions I get on a day-to-day basis. How much mortgage can I afford? It's important to keep in mind that mortgage qualification is not only based on income. Your debts, credit score, and overall situation play just as an important factor when it comes to mortgage qualification, but let's keep it simple, and I'll be using income and a monthly payment obligation of $500 a month. That could be a vehicle payment, a line of credit payment, or even a child support payment. So let us start with a household income of $100,000, a $500 monthly debt obligation, and $2,500 for the annual property tax amount, with an interest rate of 4.99% and a household income of $100,000. This will give us a potential purchase price point of $420,000. The minimum down payment required on this is $21,000 and approximately $4,000 in closing costs. Here is one example of a home that recently sold in the $400,000 range that you'd potentially be able to qualify for with the household income of $100,000. Next up, let's look at a household income of $150,000. Using the same interest rate of 4.99%, property taxes of $4,000 annually, monthly debt obligation of $500, you'll potentially be able to qualify for a $620,000 purchase with $37,000 for the down payment and $8,000 for closing costs needed before closing. That's for legal fees and land transfer tax. Here is one example of a home that recently sold in the $600,000 range that you'd potentially be able to qualify for with the household income of $150,000. Now, finally, for a household income of $200,000 using an interest rate of 4.99%, property taxes of $6,000 a year, and monthly debt obligation of $500, you'll potentially be able to qualify for a $850,000 purchase price. For this purchase price, you'll need $60,000 for the down payment and $13,000 for closing costs before closing. Here is one example of a home that recently sold in the $800,000 range that you'd potentially be able to qualify for with the household income of $200,000. The reason I provided the 3 incomes in this video, in case you're wondering of asking a parent to co-sign if the parent has no debt obligations or minimal ones, adding their income to the application can boost your affordability. This is something we are seeing more of now. Having a conversation with a parent about this is important. Explaining the short-term and long-term effects and the legal and tax aspects is crucial. Now, here are 3 ways you can increase the amount of mortgage you would be able to qualify for. Number 1, decrease your debts. Decreasing your debt will help bring down your mortgage affordability ratios, meaning you can afford a larger mortgage amount. Number 2, increase your credit score. If you have a low credit score, you most likely aren't getting offered the most favorable rates on the market. If you can boost your credit score, you will be looked at as a less risky borrower in the eyes of a lender, allowing them to offer you better rates. A lower rate can help you qualify for more of a mortgage. Number 3, speak with a senior mortgage advisor to review all your options. Having access to multiple lenders is an advantage to the consumer. Banks, credit unions, and monoline lenders have different lending guidelines to help you navigate the mortgage approval process. For example, some lenders will use all of the child tax credit income, whereas some will use a percentage. Some lenders will use all of your bonus income for the year, whereas some will use a 2-year average. Understanding your application is key to making sure the mortgage product aligns with your situation. If you have any questions, drop them in the comments below and be sure to subscribe if you haven't done so already. If you have questions, please call our office or email us, and we'd be glad to assist you throughout your home buying journey. It's RASHA Ingratta, a licensed mortgage agent with Mortgage Intelligence since 1999 here in Windsor, Ontario. Have a wonderful day.